Happy Thursday, Pat.
Rick, how you doing, buddy?
Good. So far, it's just the two of us. Jessica may pop in to give us some market news.
Well, you're underestimating our millions of viewers.
Well, but we, what we're going to do today is we're going to look at just how slow things are getting. I'm going to show some numbers that I think people need to pay more attention to. In other words, you get the comments from people that say, my neighbor, they already reduced the price on their house by 2 or 3 times. And I want to talk about why that is. And then you're going to jump in and let us know why rates have not gone down like everybody said they were going to. 4 to 6 rate cuts. And I found a clip from us from April talking about the projections for 4 to 6 rate cuts. And we did not agree. So I'm going to play that here. And I'm going to tee this up. I'm going to mute my mic.
The market numbers next week. The Fed comes out. The FOMC minutes. That'll be important next Wednesday. So,
but it does underscore what you and I have been saying, and that is that when rates started coming down, everybody jumped on the bandwagon saying 4 to 6 rate cuts this year, and the people that were saying it, they don't know, and I don't know. And so to say it and to make you make a purchasing decision based on that, I think is just not right. And, it's, marry the house, date the rate. Well, you could probably still do that because odds are we're going to be looking at lower rates next year. But, do you want to bank on that 100%? No. But to say that we were going to have 4 to 6 rate cuts this year and blast social media like agents were doing, it was really driving me crazy.
It's disingenuous, I think. I mean, for lack of a better term. I mean, it just it's you and I have talked about it. I mein, you and I have been pretty right. I mean, both of us as far as
pretty lucky.
Right and lucky. I mean, hey, but I just 6 rate cuts. My personal feeling. I said this a couple months ago. I'll take credit for saying this. I just didn't see if I was Jerry. Obviously the letter that we sent obviously made a big difference. But, if I'm Paul, they've been so wrong the last couple of years that they don't want to get this wrong. Well, your mic. Mute.
I'm muted. We wrote a handwritten letter to Jerome Powell telling him, can you please lower interest rates? And they did. And mortgage rates had faked everyone. So we're going to dive into that in a couple minutes here. Take a look at what's going on with mortgage rates. And I know it's surprised a lot of people. And then I'm going to touch on it's kind of like been one of my soapbox topics, and that is the election, because coming up in 13 days, I believe that is. Yep. And here's an article here it's called Knock, Election Year Myths and Reality. Said it's often believed that elections slow down the housing market as uncertainty tends to make buyers hesitant about big decisions. However, historical data doesn't back this up. A bank rate analysis of the S&P CoreLogic Case-Shiller Home Price Index reveals that home prices have actually risen more during election years than in the non-election years between 87 and 23. And home values increased by an average of 4.84 in election years compared to 4.4 in other years. So here's the real well done moment. Experts point out that broader economic factors such as supply and demand and interest rates have far more influence than the election. I mean, that's a well duh, but I'm going to show you some things here because there's a lot of surveys that have been coming out talking about how many people are actually sitting out now because of the election. And there are. The number of new listings that came on the past 7 days, especially this morning, it dropped dramatically. I think people are there's so much anxiety, and they're like, I can sit this out a couple more weeks.
Yeah.
And mortgage applications are way down because rates went up. Our contract ratio has dropped, which is what I'm showing here. Our number of contracts over 7 days is still, guess what, 2,500. It's not moving. 2550 one week, 2500 the next week. But our contract ratio, which is, how many listings are out there, how many are going under contract, the ratio, we're in the right on the cusp of a balanced market and a cold market. And then if you look here, this is something I really want to talk about a little bit. Here's monthly average sales price per square foot. This is after the house has sold. This is tracking our sales prices. So there's your number there. We're $290 a square foot. We went down a little bit, back up. We're down from the peak of 309. These are homes that got a contract and it closed. Now, this one here is what you're seeing when and I'm going to get rid of all these back years here. And this is very interesting to me. Average list price per square foot is $348. And what did we see on the other chart? Average sales price, $290.
Mm-hmm.
That's a disconnect. Why are list prices going up today, the average list price? Well, a couple reasons. One,
I was hoping you were going to have, I was hoping you wouldn't let me answer that. Thank you.
Well, the higher end of the market, summer's over. They're starting to put more homes on the market. So if I were to, I can't filter out on this one, but if I were to filter out homes over $1 million, they're doing well still, because surprisingly, the majority of those are cash. So interest rate hikes don't hurt them. The stock market's doing well, didn't do great today, but that's kind of where, that's to me where the list pricing is coming in. But that doesn't tell you a whole lot. That just tells you what your neighbor's asking for their house.
Mm-hmm.
So when I hear comments and I hear from people go, my neighbor had to drop price of their house 3 times already. Well, maybe now they're finally down to where the market was when they listed it in the first place.
Mm-hmm.
Because they were looking at what their neighbors were asking for their house. They weren't looking at the data that shows what people were selling. And so you want to look at the listing success rate, and you can see here that it's gone down a couple weeks, but it's not really historically out of whack.
Mm-hmm.
It was certainly better this part of the year up till July, and then July it fell down, but it's not strong. And Chris D hits, my builder in Queen Creek still building, even though there's many homes unsold that have been move-in ready for months. Jessica was going to jump in, and she may still make it. She's got some closeout numbers she was telling me about yesterday, and that there's there. It all depends on the builder. As a rule, the new homes are still moving. This is an article. Home buying gets easier in key battleground counties, but voters may not feel it. And they're talking about Atlanta and here in Maricopa County. What they mean by getting easier is, simply put, well, the bidding wars are gone.
Mm-hmm.
Affordability hasn't got easier. And that's what we're seeing. But let's jump over, Pat, to you, and let's have, I think, kind of a lengthy discussion of some of the headwinds that we're seeing on rate, on mortgage rates. And again, the narrative was central bank is going to cut rates on September 18th. Hold on to your hats. Here come the buyers. That's when rates are going to go down. And they have been going up ever since the Feds announced a rate cut. Why?
Yeah, I just, I wish we get Jerry Powell on the line to maybe have him jump in and give us a kind of a better explanation.
He pays attention to our letters, but he never answers our calls.
I know he never answers our phone call, but he does that one letter. He did jump in and answered our letter. I mean, it did, honestly, it caught everybody by surprise, this move here. This has been since here's after the federal rate cut right here. I mean, we've been seeing this. These are rates. These are bond. These are Ginnie Mae 5.5% coupon. I mean, it's just been a steady climb since really Monday before the cut, September 16th. It's been just this headwind it's one of these 3-4 weeks where you're like, you just want to put your head in the sand and say, what the heck, I mean, it's been tough. I mean, there's been a lot of expectation. The Fed, you're going to have a lot of pundits come out and say all these experts now, I don't think anybody saw this run up recently, but there's a lot of election, who gets in, whether Kamala gets in or Don gets in.
Well, remember the chatter though, just a few months ago, the central bank's going to cut rates to help the election.
Yeah.
Because they don't want Trump. They're going to want Biden. And everybody's like, he's going to cut. Well, he didn't, did he?
Yeah.
And even if he did it in September. That's too late.
Yep.
And even though they went down 0.50, mortgage rates went up. So it's not really helping the economy. The economy is doing well in most sectors.
Well, I think, but I think you got a bifurcated market, though. I think you get a bifurcated economy. Yeah. I mean, you've got people are in this. The people are in the stock market. They've got 401k stocks. The wealthier people, the upper middle class, they're doing fine. But let's face it, the average Joe Smith on the street with 2 or 3 kids is grinding away with inflation. If their rents have gone up, if they want to buy a house, they're feeling squeezed there. I mean, they're ticked off. I mean, we're not all in this one happy basket of people. And, you're seeing that in the polls. I mean, people are, you see these people interviewed. They're just, like, why do people keep talking about the economy, the inflation, taxes, insurance, car insurance, house insurance is going up. People are just feeling squeezed. Now, like you said, in general, the stock market's doing well, but if you really cut the cross section, it's still a grind out there.
I'm seeing that in offers that are being written too. There's nobody even considers writing relatively close to the asking price, even in instances where you can look at the asking price and go, that's pretty good compared to the neighborhood and the comps and everything, but they're not going to do it. It's just like, I've been beat up for 3 years. I'm coming in at 40,000 less, if not more.
Yeah. Miguel's right. The stock market is it is the economy, but it's not the economy. I mean, it's not, Don, both people, when the stock market's doing well, each president takes, credit for having a great economy, but yet there's this underlying tone in the market that's just been, it's been very tough to figure out. Econ 101 books have been thrown out the wayside. You got the federal deficit, 35 trillion. If rates get any higher, I think if rates get higher, they're going to be battling with this debt, the debt that they've got.
Well, I'm glad you brought that up because I got a couple charts I want to show you here and talk about, and let people know. Be sure and smash the like button today because we're going to have a drawing, and the winner gets to have lunch with Pat at der Wiener Schnitzel. And again, I mean, you're always giving. So that's, but you have to punch the like button. So here's the debt. This is federal government current expenditures, just the interest payment. Look at this.
Yeah.
This is just the interest, 1,096,000,000. And you say, okay, well, that number means nothing to me. Well, this is going to be a busy one for you. You've seen this before. This is the national debt clock.
It looks like my head.
Yeah.
Yeah. My brain.
You stare at this long enough, you will have a seizure.
Yeah.
Here's the interest on the debt right there. On this one, it's saying 957. No, 975, 957. And that's interest on the debt. And look at national defense. We have passed national defense just with interest on the debt. Yeah. And you can see the rest these are the big 3: Medicare, Medicaid, Social Security, big 4, defense, and interest on the debt. And it's totally out of control. Total U.S. debt, 35 trillion. So here's what I wanted to ask you, because I saw, in fact, Dan Frio talked a little bit about it today. He was actually interviewed by one of his channels there. And will that continue to climb? What other choices did the U.S. have? That's a real can of worms as far as getting the debt down. I honestly, you can only get the debt down through growth. Cutting, you're not going to cut Social Security, you're not going to cut Medicare, but you can increase revenue through growth. I'm not going to go down that rabbit hole. But I think here's the other effect of the debt, Pat, that I wanted to ask you. Debt is financed through the sale of treasury bonds, right?
Yep.
Okay, so we're borrowing this money. So we have to sell these bonds, and we have flooded the market with them. And when you flooded the market with them, investors expect a certain rate of return because there's too many of them. So they're bidding the rate up. And so what's safer, mortgage-backed securities or U.S. Treasury bonds?
Well, rates, I mean, it depends on your mortgage-backed securities. You're always looking at the refinance end of it because it could, the turnover.
But the U.S. Treasuries are safer. So
the MBS has got, you've got there's a lot of components behind the MBS, the mortgage-backed security market, in terms of servicing it. From a purely vanilla standpoint, Treasury, it's a cleaner probably security.
Well, it tends to go a little bit higher than the Treasury notes, but then not only just us, but Japan's flooding the market with their bonds, and China, I think they are embarking on like 800 billion in issuance. So now the bond traders are like, okay, well, we're going to have to bid the U.S. bond rate up higher, than China. China's not as safe. This puts pressure on lending, pressure on the credit markets that people have been warning us about for a long time. Now, the central bank at one point may have to come in and start buying those and putting them on their balance sheet, just rolling them over and hanging on to them.
And that's basically what they call easing, Fed easing.
Yep.
Liquidity, and that they actually have not been doing that. They've been basically not rolling over any treasuries that roll over. They have not been reinvesting and buying them. They just been letting them roll off. So
Sebastian here still having a hard time selling his 1,800 square foot home in Chandler above $1 million. You're almost there. I know you've got that gold sink in the bathroom and the pearl handles. So I'm really surprised that you haven't got your 1.1 million yet. And I've been by there, maybe mow the lawn. So, might as well cut to 1 million before it gets worse. Yeah, it's and you live right down the street from Pat, and that's a bit of a factor there. But if they do, I mean, so let's walk through that scenario. We're not long-term prognosticators, but it's an interesting topic that says, are they going to reach a point where they're going to, in order to get control of that debt, are they going to have to start purchasing treasuries and holding them on the Fed balance sheet? And is that not QE again, quantitative easing?
Yeah, I mean, that's one thing that they did before back in the day, a couple years ago, which they stopped. Obviously, I don't know when they stopped it really tight. I can't remember the date, but there was a chart you can go on the Federal Reserve to see daily their purchases, and it was amazing how you watch the chart, how they went from, what it was like 300 billion, 400 billion, every week to then it got down to 100 million and 40 billion, it was in the billions, and then it started getting chopped down even more. So they have not really gone to that market at all. I mean, it's just disappointing to see rates go from high fives, low sixes to high sixes in such a short period of time, the last month. I think you always have these little skirt ups. I mean, right now you've got, like I said, go to my chart real quick. I mean, right now, just to show you my chart, obviously the 475 purchase, 5% down, 780 FICO score. Right now, let me just blow this up a little bit just to show you behind the scenes in pricing. This is Provident, a paper lender. I mean, back, 4 or 5 weeks ago, just to show you the difference in pricing, I was getting 5 7/8 to 6 was like about $1,500, $1,600 cost. You're right around here, 6, right around there. That was the kind of the par rate, where you didn't have to buy up or buy down. Now to get 6%, you're talking about $11,800 cost.
Wow, that's a huge swing.
So I mean, from 6 to 6, this is where we were. This would have been 6 3/4 would have been about a month ago. Would have been a cost of about $1,100. So we're up 3/4 of a point in the last 4 weeks. So it's been brutal. I mean, these are the type of moves that just give real estate people, mortgage people, heartburn. because this is where this is the type of market where you're starting to push out that marginal buyer again, because your payment, let's say on the 475, 5% down, you got a loan amount of 451. All right, so your payment, principal and interest is $2,705. But now you're looking at 29, let's just say 29, 27. So you're up $225 a month just in 4 weeks. I mean, that can just shows you the marginal, how you can, the elasticity, the pricing elasticity of rates, how they can, before 4 weeks ago, there's probably people that were qualifying. Now it's maybe knocking out those marginal buyers.
Well, and then you've got the the lingering unaffordability, but but there's still, I mean, even with all that, Pat, when you look, this article here, it says, what's that federal funds effective rate?
This is the federal fund rate. This is, I'm just showing that this is the federal fund rate, just to kind of the federal funds effective rate, basically federal fund rate. But back in 05, we saw a run up in 04 from 1 to like over 5.25. It just was a short stint. It almost looked kind of, who knows where we're going to go here next, Are we going to are we peaking here and it's going to start coming down again the next 3, 4, 5 months? Who knows?
Well, in our pending home sales jumped 2.5% in September, the biggest monthly increase in over a year and a half nationally, according to Redfin News. So I looked up ours, and so they're saying from September they went up. So that would probably be right here, but we didn't go up versus last year. I mean, we kind of have hung right there at 2023 levels and still well below 2022, which is the green line there. So nationally, pending listings went up, but the other one that I like to look at too on the side of just pending listings is under contract, and they're basically the same thing. Listings under contract. Here we go. We'll take a look again at September. So it's pretty been flat line. So we're not growing. We did go up versus 2023 from 6,100 last year to 6,650. So pending, or that's not pending, that's under contract, did go up a little bit. So the Kelly here is saying, what's happening, buyer or seller's market? Kelly, it looks to me like there's a smoke and deal going on in Chandler, down there, 1,800 square foot. And I'd offer him $999,999. So seriously, what's going on happening, buyers or sellers market? The best way to look at that is, I think, to go to that first chart that I had up here, which, if I can find it again now that I got rid of it, was the listing success rate. It has us right at a balanced market, almost in a buyer's market. So we're right on the edge. But again, it depends on the price point. Is it good for sellers? Help. It's okay for sellers. It's not great. It all depends on the market. We're finding the over 55 markets are just really at a standstill right now. And that may be, I don't know, the people staying home to vote before they come down and start looking at homes. But sellers, you're going to have to be really on top of what's going on in your market. Open house traffic is way down. But let's see what happens in 2 weeks. If 36% of the market is waiting till after the election, let's see what happens.
Yeah.
Kelly says, yeah, Miguel here says, it's only worth whatever the buyer's willing to pay. Good luck. Sebastian, he obviously hasn't seen your house. Kelly, my home's worth $320. I want to list in January. Now, January is when we have the highest number of listings, and that's a decent price point. You might want to consider listing before the holidays, and I'll tell you why. Because a lot more people list in January. That's when we get most of our listings. the serious buyers are out there before Christmas.
Mm-hmm.
You know, they got a corporate relocation or something. So don't shy away from that. You know, it's just it. Be aware of how many people are going to list in January. That's every year. Every year that happens. We got nuts here. I think I might get approved for 550,000, 50,000 down, making 120,000 a year with zero DTI. What do you think, Pat? I'll leave that up there for you.
I'll send them out a pre-qual letter out in the next 5-10 minutes. Sounds good. Zero DTI.
Right. Yeah. That sounds like
a pretty good borrower to me.
Yeah.
But even with, so credit, but no, I think this market, it's become now, obviously this shake up in rates. I think it kind of shook people up a little bit, can make them a little bipolar, just kind of shook them up. Does that make sense? I mean, it just feels like people are like probably wondering now, okay, maybe this is not going to be as easy as I thought it was, because everybody thought rates were going to keep going. And everybody 9 out of 10 people, the way rates were trending downward, we're still in that downward trend, but we've seen this spike, and we've seen this before where we've had these 2 to 3, 4 week spikes. Now we've got the ceiling, just FYI, go back right now. We've got, let me just refresh this. I get this little chart right here on the NBS Live. It's okay. Where the hell is it? Right here. The floor is about 387. We're at 4.213 right now. So, we got some ceilings at 4.3 and 4.35. Obviously, we saw here, let's see, back in, I think it was April, let's see, what the heck, where are we at here? Yeah, April, we saw spike around 475. If we 475.5, we saw 5 obviously last October. It's obviously making people really stop and rethink what the hell they're going to do. I mean, the people that are looking to refinance, it's probably making them crazy. Like, okay, if rates get back down to 6, high 5s, I'm going to refinance. I'm going to take that number and run with it. But longer term, you got the federal fund rate. The dot plot says we're going to be at 3.75 by about May. We're at 4.75 to 5 right now. So we're still looking out longer term. They're saying May, you're going to see lower rates. But in the meantime, it's just painful. I mean, in terms of a buyer, with rates going up, if you are in that position to be looking at buying the next month or two, maybe re-implement that 2-to-1 buy down strategy. You got the seller that maybe has that house that's been listed for a while. They're willing to give you, like we talked about before, the seller concessions, about $9 to $10 grand. If you get $9 to $10 grand, you can get a 2-1 buy down. If rates are still in the high 6s, you can get your rate. If you are really motivated to buy, you can get that start rate in the high 4s. So that is one strategy to kind of get you into a house that, if you are really, and we're not, we've never advocated, like the typical agent, buy, because every time you talk to an agent, their theory is buy. There's never, and you and I, and you've been very good about it. Like, hey, you know what? I sit back and kind of wait in the weeds a little bit. And this is the kind of market you can, but if you are in a market that you need to buy or want to buy, you're not up against 10 or, once again, we kind of profess this has been a whole hum market this whole year. Like we said in the beginning of the year, it was going to be that way, which it has been, but this is a market where you don't have 10 or 15 other competing offers. So,
yeah. So, it's, if you've made the decision that you want to purchase and you're waiting until after the elections, my advice is, that's only 2 weeks, so you can wait that out. But, so are you waiting and now things pick up and now I'll buy? Yeah. Or are you waiting and thinking, oh, wait, things are going to go to hell in a handbasket? The statistics tell us that neither one of those things happen.
Yeah.
So it's just, so you have to throw away all that noise and all that news, and you have to say, okay, what's happening to average sales prices now? What's our supply versus demand? And we're seeing that it's approaching a pretty good buyer's market. Rivik here says, as mentioned, our North Scottsdale home's been listed for 90 days, no offers, even though we dropped the home at 20% below neighborhood comps. I've heard some struggles in the North Scottsdale area. That can be, it really depends on the neighborhood. And then below neighborhood comps too, how far back did you go? I don't have those numbers in front of me here. Miguel here says, I think November 22 is repeating. Listings will rise and sellers will panic for several months. Not sure about panic, because right now, a lot of the sellers that I'm seeing are quite honestly testing the market.
Yeah.
Putting it on the market. They're either letting it expire or they cancel. They're not panicking because they don't have to. Like, I'm going to try and sell the house. If I have to sell the house, then I'll probably have to make a price adjustment. And you can see here, our active listings are just eking above last year. That's 2022. So that's 2 years ago. I made the prediction on last week's show that we're going to go right the same pattern. And I think Jackie said we were going to be flat. So that's my opinion. But hey, look who just popped in. Give us a little word from the road here. Let's see if I can unmute your mic. I think you got to do it on your end.
Yes, I do.
There you are.
Hi.
Howdy.
Howdy.
Here I thought we were just going to end this show and go for happy hour, but she's going to pop in now and she's going to ruin my whole happy hour. Great.
Aww.
Yeah, fine. Yeah, make it fast, Jessica.
All right, let's make it fast, Jessica.
Right. Let's get to happy hour.
Papers.
No, it's
so what are you hearing out
there? Yeah. So I've got a zip code 85209, 85212. I've been watching, and I'm telling you, honest truth, since April. And homes hit the market, homes went off the market. There's still right now 6 in this area, in this price point. And there's been nothing new for 3 weeks. And we slowly keep seeing a few price adjustments. But those houses, the price adjustments on those houses have all been houses that have needed work, or they have, in a buyer's opinion, in probably mine, coaching them in 20 years in real estate, either a stigmatism to the property.
Oops, yeah.
2 zip codes is gone. So, oh no.
Oh, you're back. You're back.
I'm back. So it was interesting. I wanted to share that. I've been watching for particular buyers in one neighborhood, and we can't get a house.
It's just the ones that are out there just aren't. They need some work.
They need work. Yep, they need work, and nothing new is hitting. So buyers. When you say it's a buyer's market, they have the choice, but if the house doesn't fit, I guess a lot of them need work. And there's only 6 in this zip code, in this price point. I'm watching the same 6 sit there. So when you say there's an issue, the issue is those houses need work, or the sellers need to drop their price. And buyers are making offers on them. We've made offers on 2, and just can't have meeting of the minds.
Yeah, because it's. I think it takes longer for sellers to come to terms with what the market. I mean, I saw a thing in a Facebook post today saying that that she did. The listing agent used RPR, which is one of our softwares, to do a valuation on the property. So the sellers are like, well, RPR said that's my number. And it's just a flying over 30,000 feet, just like Zillow, right?
Right.
And so they've had 2 offers and they won't take them because no, that's RPR says this. If you sell, you have to have a range and you have to understand the market. If you're attaching yourself to a number, good luck. It's just not going to work. What do you think of this? New build buy downs offers is a rate of 5.875, a good rate given today's market.
It's a point lower. Yeah. I mean, it's not bad.
Is that fixed? Yeah.
Yeah. It just depends, right? Every situation's different. I mean, you got to look at what what rate is good and what's the cost. I mean, everybody has to look at what is the cost to get that rate. And then when I talk to people, I pull the screen, I pull the curtain behind the screen and say, hey, I'll show them exactly what the cost is to get a certain rate. You've got these lenders out there. I'm not going to mention any names, but one starts with a Q and an R. I mean, they tell you, we can get this rate, but you're paying $15,000, $20,000, $25,000 for that rate. So nobody's got this magical. There's not a lender out there that's got this super magical rate. Credit unions usually can be little bit, a little bit more competitive with rate, but their product line in terms of loans is limited. So I was just thinking, I wonder, just on a note with that Jessica said, is that the reason why I'm still on the dating, still on dating sites? Is I'm on the market too long, as I need updated, or I've just got things wrong?
You have a
yes, we need.
Is that why I've been on the market too long? Kind of like a house that's been on the market too long.
We need to change up your look for sure.
Yeah,
absolutely. Like it just needs it doesn't have to be a facelift.
I just need to freshen up some things.
Just started out by saying, does this font make me look fat?
Yeah. Do these, what? I mean, you can't wear corduroys on a date anymore. What the hell?
I guess my point to all of that was, any house, if the house can command, if the house shows well and it's priced within the range, right, Rick?
Yeah.
It's selling. So the only homes that we're seeing sitting on the market are homes that have been stigmatized for a particular reason, or homes that were overpriced and they're either not making price adjustments or don't care, and they're just going to sit there. Like say I'll sell if I get this. Otherwise, if the seller's motivated, stuff moves.
Well, the thing of it is, I think, correct me if I'm wrong, you guys and gals, people can afford to sit and wait because they have equity. If they're looking to sell, they bought the house 2, 3, 4, 5 years ago. It's not like, this is what people don't understand. 06, 07, people were buying 100%, they were doing 100% financing. If they had to sell, they had to sell, and they're getting squeezed. But now people have got $150,000, $200,000, $300,000, $400,000 worth of equity in a house. They're at 3%. They've got the luxury of sitting and waiting.
I like running it out.
Interest rates were lower.
Yeah.
Record amount of consumer debt, obviously affecting some of this mess. And so I pulled that up for the Federal Reserve, and this is debt compared to your personal expenditures. And I know they're saying it's record amounts, and I'm not disputing it, but when I go to the seat, record amounts to me was back here.
What year was that?
50.
I can't see.
That's the year of the run up before the crash, 2008. Mm-hmm. So that was 2004 and 5. People were taking on a lot of mortgages and jumping in, and they were getting these teaser rates, but they were still on the hook for the entire note. So there's a lot of debt, and there's a lot of hidden expenditures too, like daycare. So that doesn't get Rusty says, I close tomorrow. The housing market will crash within a year. My middle name is basically Murphy. I think you're probably fine. Maybe a year and a half. No, I don't see a crash. But congratulations anyway, Rusty. What part of town are you buying in? I'm going to pull up 85022 here. See what we got. I'm going to do analysis by zip code here. Active listings. And that's 85022. Where is that? Like any of us memorize zip codes.
Tempe,
it's not
Maple
East
Ash.
Valley.
So Tempe, Maple Ash.
8522. Oh, is it? That's
78 listings this year.
No,
60 listings last year.
082.
That's what? 85022.
Where is it?
Oh, Tempe, Maple Ash.
Oh.
Rusty says it's down here, Tempe.
That's a unique
okay,
area.
So there's your active listings. Now let's see if I can look at let's see. I want to look at some stuff by zip code. I don't think I'm going to hear. Here we are. Annual appreciation. Months of supply. Let's look at pending listings for that area. And they are just about where they were last year. So it seems to be holding its own pretty good. Oh, I see. Rusty's saying Tempe Maple Ash is where he's buying. That's not 85022. Okay, cool.
I guess all right, 85082.
Yeah, 85. My old office was 85281. So by the Tempe Town
282.
Marketplace.
282 281.
Well, we'll have a zip code class tomorrow. Little
Yep.
Zoom call. And,
Hey, just roll back to my
Like
chart real
airport
quick
code.
here. Roll back to my chart. I just, I pulled this up just before the show, and this is kind of an eerie, not eerie, but it is very interesting. You see the federal, unemployment rate. All these shaded areas are recession. Look at it's just eerie how you have, this little blip recession, little blip recession, little blip recession, little up, upturn, recession, upturn and recession. Same here, same here, same here. Then we had this, and this is where we're at right now.
Upturn.
Up, who knows? Do we have a recession? They're forecasting supposedly some type of recession here in the next couple months. So the charts definitely say, it looks that way, but who knows? So eerie how it's eerie how it correlates to everything since 1950.
They definitely follow a pattern, don't they?
Yep.
I'm pulling up here for Stephanie here. How is 85212 looking? So I'm going to roll and grab that here real quick.
Why I thought she closed on a house a couple months ago. When she looking for it again?
She wants to buy. She wants to see if she can afford Sebastian's place.
Yeah.
So, because he's just lowered it, so it's going to go quick. 85212. Here we are. Okay, here we go. We've got active listings. Pending listings are 78 versus last year 91, and pending listings. Oh, I pulled it up again. Same thing. That's not what I wanted. I wanted zip code. I wanted active listings. That's what I want. 85212. Sorry. I wish this was quicker. 215212. There we are. So your active listings are kind of with the rest of the market. They're right by. I'm going to pull that comment off there. Got to scroll down to do that. The active listings are right where we were in 2022, which is where the rest of the market is. So,
Hi guys.
so it's trending with the rest of the market. And we got the uneducated geologist here says, new builds in my area have started buying it down rate to 499 and providing 25,000, 4% towards closing costs and upgrades. Good old Jason up in the Pacific Northwest there. So, yeah, that's pretty low. Corey here says sold back in June. How did I do? Pretty good. It didn't start slowing down till July. What about townhouses or condos? They're pretty slow. Hey, you have news on condos, Pat. I think we lost Jessica there.
Yeah. Last week, Provident, the lender that I show for pricing, they actually totally pulled out of condo financing last. I think they're going to pull it out. I think they said ain't condos in the pipeline have to close by the end of this month, but they're going to not finance condos anymore. And they're one of the biggest. They're a solid bank that does paper lending. So that's kind of a, who knows if that's a thing to come. See what the holds in the future. But that was very interesting.
Not good news.
It's not good news. No, I mean all the problems that they have in Florida and whatnot. So when it seems as though, who knows? Obviously, another lender will probably pick that up, but it just shows you that they're a very risk averse lender. So they are just basically saying we're stepping away from condo financing, which you and I have always talked about. That condo financing has always been sort of a stickler.
Yeah, especially now that they've got them doing that. What the heck's it called? The deferred maintenance.
Deferred maintenance. Yep.
So here's 85022. We got 20 pending listings and right about where they were in 2022, slightly higher than last year. That's a good thing. And then we have active listings are still below 2022, 60 last year, 78 this year. I could probably pull up some specific information on condos, but I might bore some people here. Unemployment will not show reality. I know many trades that are only working 24 to 32 hours. So instead we will have underemployment versus unemployed. My son is in the middle son. He's in the tech field, and he lost half of his team last month. And so he was nervous. He's still nervous. He said, Dad, there's a real bloodbath going on in the tech industry.
Yeah.
And he says, some of it's AI driven, but he said they told him they needed $2 million taken out of their costs. And Microsoft bought, they buy a bunch of gaming companies. And so they came after them. Here's
I'm not sure what he means.
Here.
That was 207. I don't know what he means.
The condos first and then domino effect. Terrifying. I always hear condos are the first to fall. I brought that up with Tina Tambour once. I said, they're the last to go up and the first to fall. And she pushed back and said, no, that wasn't the case. And I really didn't dive in to see if that was the case or not. Do condos attract higher interest rate, or are they the same as single family housing?
Higher interest rate. That's typically, it's not, you're getting 6 on a single family, you're getting 8 on a condo, but it could be, quarter point, 3/8 of a point, sometimes difference. It all depends on how much money you're putting down. Also, it varies. Your pricing is going to vary whether you're putting 20% down, 25, 15, 20% down, or 10% down. So it varies. Your note rate's going to vary on how much you're putting down also in your credit score. And if it's a 5-story, if it's a high rise, if there's different characteristics to a condo that make it a whole different animal. So
there's your score. There's your pending listings there, Kelly, in 85022. And another thing I wanted to show here too is months of supplies. And I'm just going to pick well, first, let me look at all. We're at 3.6 month of supply. Let me go to condos. Condos are sitting at 4.2. So there's more condos than there are single family homes in relationship between supply and demand. Now, 4.2 isn't alarming. It's at one point considered normal, but when have we seen normal?
Haven't seen it all for a while.
Interesting. I think I just got a text here from Jessica, probably saying her phone died, so she just never pays her bill. No, she ran her battery down, so when you're doing a live stream like this on your phone, you don't get a lot of battery life left. In 2007, many lenders went to 80% max loan to value on condos, then dropped condos altogether. That's why Florida condos dropped 70% in price. Well, their HOA fees are nuts. Talk to Dan Frio up in Chicago. He's got a condo down in Florida. He said his HOA fees are just astronomical.
Yeah, deferred maintenance. I mean, you're seeing some of these people that are getting, I saw on the news this one article saying that this one HOA is raising their monthly payment $2,000 or $3,000 a month just to cover the deferred maintenance. The millions of dollars they have in deferred maintenance. So yeah, it's still a different market. It's a different.
I saw a neighborhood in Sun Lakes, Pat, and it was they're attached homes. They're I don't want to call them patio homes, but I can't remember the name for them. But anyway, so they were listing these homes, and you look at it, and Sun Lakes is expensive to move into. You've got an HOA fee that's not that bad, but they've got this capital improvement fee of $55,000 that all buyers have to.
You're talking about Sun City, right? Sun City.
Sun Lakes.
Oh, Sun City has the same thing.
Yeah. Well, this particular neighborhood, they have a special assessment for new roof, new paper, to the tune of $7,800 per home. And so these people were trying to sell these houses with that special assessment of $7,800. And finally, the only time they sold was when the homeowner paid off that special assessment so that the new homeowner didn't have to come in and get it. But that to me was really bad management. How do you not budget for, paper on your roof? Paper's usually only good about 15, 20 years.
And that's why condos are definitely a different financing animal, because you've got, unlike a single family residence, you don't have these special assessments popping up on a single family home. So that's why you have to do a lot of digging into condos before you do buy a condo, because you got deferred maintenance, you got insurance. What's their insurance coverage? There's a lot you have to do to, like we've talked about in the show several times, that you have to do a lot of digging before you really dig into a condo. And really put your feet down. So anyway.
Yeah. So it's same with townhomes.
Yep.
But it's a lower priced alternative for people that are tired of renting, and then
Yep.
sometimes it works out okay, but you got to do your due diligence. That's for sure. So,
yep.
Well, Pat, it was good to have you on the show again today. And
next 2 weeks we've got kind of a busy time frame. We got Tuesday, we got the JOLT report. We got Wednesday, we got ADP report, GDP numbers. Thursday, we got the core PCE coming out. Friday, we got the BLS numbers. So, and then November 5th, we got the elections, and then November 7th, we got the Fed meeting. So there's going to be I think there's going to be a lot of volatility in the interest rate market. Nobody's got a crystal ball.
I'm really going to be watching the numbers after the election in real estate, and and because I want to see if my theory of nothing's going to change holds. I mean, because now you got 50% of the country is going to be happy, 50% is going to be mad. So they're going to talk about that for a long time. The stock market's going to go up.
If you're right, I'll give you a bottle of water. Okay. How's that sound? Okay.
I thought you were going to. Oh, I want to remind people again, if you hit the like button, you entered into the drawing to have lunch with Pat at Der Wiener Schnitzel. So, you don't want to miss out on that. Many of us have been telling you housing crash was coming. You did not believe it. It's really going to crash after the election, short term if Trump wins, very long term if the Marxists wins. I'm going to stay out of that. I don't see a crash coming. I'm sorry, Timothy, if you see that, we're seeing a slowdown. To me, a crash is 30-40% reventure consulting but I don't see that happening. And I don't know really the fundamentals of real estate, regardless of who wins. I don't think it's going to change that much. So says, let's do a meetup. We should. Let us know when you're coming down here. One quick one here, 85254. I'll do this before we sign off here. 85254. Because I got a scoot. I'm showing a home up in Northeast Mesa, and at 6:30. So I got just a few minutes. 85254, not 3. See, I told you I was no good at this. 85254. Where is that? I don't know. They don't have many houses for sale. They got 23 pending listings, 31. And if I look at their analysis by zip code again of active listings, 85254, what do I get? Scroll. This is like when you're signing up for something and they ask you for your birth year and you just scroll down. I just have to keep going.
Yeah.
148 listings compared to last year to 115. Not bad. They aren't even at 2022 levels, which is where the rest of the market is. I hope that helps a little bit, Craig. If you got a house up there and you're looking to try and get a more detailed report, you can go to rickhelps.com, and we got a form down there below where you can send us the information. We don't spam you after that. We'll send you a real detailed report. So in the meantime, everybody have a great week. Can't wait till the election's over. And just because I'm so damn sick of the commercials.
Oh God, it's getting
yeah.
I don't know. I'm going to start drinking.
Sounds like a good plan. All right, everybody. Have a great night. Thanks again, Pat. See you.
See you, Rick. See you, everybody.